Hello, everybody, and welcome back to McG Speaks. We're continuing our series of talking to business line leaders at Ash Brokerage on all the different capabilities that Ash Brokerage can bring to your practice. And today, I am very honored to introduce Brian Lauber to the audience. So, Brian, tell us a little bit about yourself and your role here at Ash Brokerage, please.
Thanks, Mike. Appreciate the opportunity to talk about disability income. And technically, my title is I'm the Senior Vice President of Disability Income and Long-Term Care at Ash Brokerage. But the thing that attracted me to Ash a few years back was they were looking for someone to come in and run the DI area. Didn't have the long-term care area initially. And it really was, they were interested in growing the business. And I thought it was the best opportunity in the marketplace to come into an organization and help more working Americans get disability income, grow the business, and also to kind of, we wanted to have an impact on the industry. We really did. And I'll talk about that later on, one of the questions you asked. Ash gave me that opportunity. But today we're going to talk primarily about disability income, I know, but I also am involved with long-term care.
And so one of the things around the DI industry, talk a little bit about at a high level to start out with, where is the DI industry? And what challenges and what opportunities did you see when you came to Ash?
Yeah, I think the biggest opportunity is the DI carriers in the marketplace have done nothing but try to make it as easy as possible for advisors to place disability coverage. I mean, there's e-app, there is simplified issue. It's never been easier from an underwriting standpoint. And that's been the number one complaint from most advisors in the past was disability is a difficult product. And we can't say that anymore. It's gotten very, very easy. But on the flip side, the challenge has been a lot of carriers are not doing training and education anymore. So the only real carriers doing training and education are the core career carriers who have their own DI product. The independent market has been kind of left to be on their own, and financial planning software is pretty good, but it just hasn't gotten there yet. A lot of advisors use financial planning tools and software. Either they don't turn on the protection side of that software, or they've not been trained how to use it. So I believe our number one opportunity is help advisors to be able to educate them on the need for income protection across the board, individual market and the business market, both big opportunities right now.
Now, you mentioned about simplified underwriting and things like that. That's an interesting perspective because I thought that you were going to go down a path of like, oh, underwriting is tough, but it's actually exactly opposite. Talk a little bit about what are the parameters in order to get that simplified underwriting, because I got to believe that that's in the business marketplace.
Yeah, and I'm going to touch on two marketplaces. First of all, the individual marketplace. People ask, how is it being served? Well, I wrote down some numbers. And there's 163.3 million people are employed in the United States of America. I mean, they're working and need an income. Most of those people don't know about their income protection program. The only people that actually seek income protection are doctors, attorneys, people in those categories who've been taught they need income protection. The majority of folks don't need, they just assume they have it at work. And that's one that's underserved. And there's approximately 350,000 financial planners. So we have a huge opportunity, and a lot of it is because people don't know about it. The number that's quoted by Limmer is only 14% of the working population is prepared for a serious accident or illness. And we're not talking lifetime disabling, like 2 to 3 years being disabled. On the business side, there's 33 million small businesses out there that employ 45.9% of the working population.
Wow.
So if you just want to look at the individual market, huge opportunity. You could talk to pretty much every one of your customers who are to the age of 55 that need their income and ask them to review or do an audit for their disability income product. If you want to get in the market that is kind of booming right now, it's the multi-life market. And let me tell you why the business market's so exciting right now is, one, there is a lot of businesses looking to retain talent. So it's not an income or insurance issue, is that retaining top talent's important. So having benefits for those top people, which usually is income and protecting it, are absolutely critical. The other one in the business market that is most business owners don't realize that they can put in group LTD for everybody, all their other employees, and then do something special for themselves and the other key employees. So that market is for as little as 5 lives. You can get guarantee issue with a census enrollment, no script checks. And I talk a lot about all the other products. There's 401k supplements, there's group life supplements, group DI, and there's going to be long-term care supplements going on in the future. Of those, disability income right now is the easiest to underwrite on its guarantee issue basis. There are no script checks and census enrollment, except for some states. So a huge opportunity out there. You combine that with a lot of noise in the marketplace. I want to retain my employees or attract them. They're looking for executive benefits. The other thing that brought some noise up was Conley versus the IRS. There was a buy-sell agreement out there that got challenged by the IRS, and because it wasn't properly reviewed and put in place, they taxed it. It was a family situation. For a lot of business owners, if you have a buy-sell agreement, review it. You should review it to make sure it's up to par. The other thing is a lot of buy-sell agreements aren't funded for disability income. They usually are life-focused. If you and I are partners, we want to make sure. So we're finding opportunities in that area. And the other really hot area is key person. A lot of businesses have realized if you and I are sales reps for a company, even like with a high-end car dealership, if you and I are the rainmakers, and if one of us were to become hurt or sick, that company could lose substantial revenue. And there's a need to ensure that person, so the company's protected, to find another, rainmaker, so to speak. So the small business market is very, very popular, but I believe the overall market in general is very, very underserved.
So, Brian, what has been the time frame of easing up or the impact of the simplified underwriting? Because when I was in retail, wasn't the case. You had to have 25, 50 lives, it seemed like. What's been the time frame of lowering that down to make it more accessible for so many business owners and people?
It's been on a trend for about 5 years. Then when COVID hit, I think that's when everybody kind of went, kind of the aha moment was technology and process over product. So a lot of the carriers went from competing on a product, right? Leapfrog, I got a little bit better here, you got a better price, or I come up with a rider. It's with all markets, all insurance products do that. You deal with annuities every single day. Someone's tweaking it. Well, they got to the point they've tweaked it so much, the only thing to do is make the process easier. And they've learned they were over underwriting the business. They were asking for APSs and reports they really didn't need. And then they realized it didn't really impact that or was going to have impact on the disability claim later on down the road. So they eliminated the noise or the things they didn't need anymore, just made it more efficient. And efficiency is absolutely critical. If they were over underwriting it, so to speak, they're wasting money getting the same result. So they eliminated those things, and technology has done that. They've measured in metrics, and it's made it very easy. And they realize you can do an e-app. We do a lot of pre-screening. So in our business, we see a lot of situations. It's even on our proposal request form. There's a couple knockout situations, and we have enough experience in our marketing folks that they can tell you pretty much, if you have these conditions, here's what's going to happen. So free screening has been huge in the DI market.
So you touched on that a little bit. What is the scale of the DI business at Ash Brokerage? You talk about pre-screening, all of our expertise. Talk a little bit about all the people that are working for you, Brian.
Yeah, and I'll step back. As the first thing that attracted me was the opportunity to grow the business here at Ash and help more people. Actually, it was a little bit of a challenge. A friend of mine was telling me that the business has got kind of soft. The industry hasn't grown much. And I said, well, it's not based on consumer need. And so I was kind of motivated to come back full-time into the DI business, and Ash gave me that opportunity. One, we knew to grow it, but our goal really is to be the most efficient DI BGA in the industry. And here's why I think that's important. What I talked about before, there's no sense of getting business in you can't get out. We serve the advisor, and the number one complaint used to be is underwriting's a hassle, or I do all this work and I don't place it. Well, our placement ratio right now is 15 to 20% higher than industry average because we screen, we talk to advisors. I'm blessed with having a really great team of experts inside that know this business. And so when we set up to be the most efficient, that means we place more business and have a higher placement ratio. Now that's great for Ash because ultimately our business runs it more profitably. But if we think to who we serve, which is the advisor, you have a 15 or 20% chance better than the industry average working with Ash to get your DI done and paid, and your customer needs it. Even if it has a waiting or a waiver or a rating, because sometimes it's issued other than applied for, we will help them place those cases. And that's critical. People ask what we do every single day. I have a fun job. I do everything from talk about DI to point of sale to help them with a problem case. I have been doing this a long time, and I'm very lucky to have a team of other people with the same amount of expertise. So we work as a team, and we think if we keep our goal of being efficient, we'll never have these up and down years. I think people grow and then they go down. It's because they don't have a very efficient model.
Yeah, and I always look at a lot of carriers in the great business lesson core financial professions, right? I mean, those carriers have become more efficient. We need to think about how do we become more efficient as financial planners? How do we get more wallet share out of our business clients? And this is an easy step over, it seems like.
Yeah, I believe the transition from financial planning to risk protection is pretty easy. I'll tell you a couple of the hurdles where I talk to financial planners all the time, and they ask me how difficult it is to bring up the conversation. Well, I ask this, what is your income plan? So I've invested in your money. I have a financial planner. We're in this business. I have a whole license, but we still have planners do it for you. Two things I'll throw out I think are important. One, they're not trained to talk about income protection. So our job is to introduce it, even if it's on the software, but I will say this, software and illustrations do not sell coverage. So the number one thing we are asking is, can you ask this question, Mike, what's your income plan? Most people jump to when they retire. I need $10,000 a month. You just told me what you need right now if you became hurt or sick. That's how much you need because when you retire, you're not earning income. Your money's working for you.
Yeah.
Then it's, okay, you need 10, I've already answered what you need. And I joke about it because I call it the napkin approach. There are 4 questions you need to ask somebody when you do it. So, Mike, I know now, once you told me what your income plan is, you went right to age 65 when you're retired. Then I ask, what happens if your income stream is interrupted? What happens to that plan? It'll be off kilter, right? You can't. If you need money to put away for investments, you got to have an income. So it's pretty simple. And these are the napkin questions. When would it start? How long would you need an income to come in? If you got hurt or sick, I'm not talking to the rest of your life. We're talking for a year, maybe 2, because the average claim is 2.4 years on disability. People get back and be healthy. When would you want it to start? How long does it pay? How much can I get? How much should I have or the design element? And then what's it cost? Because cost is an objection, right? Because we're competing with other things. We're competing with things like this. Cell phones.
Yep.
The average working American spends more on their cell phone and their streaming cable or whatever they have than they do to protect their income and their life insurance. So I kind of put that in perspective, like you can have that conversation with every one of your customers. The big hurdle is health. Now I'm a financial planner, and I have a financial planner, and I asked him this. You should be comfortable, maybe not comfortable, but you should get comfortable with asking the question, Mike, tell me about your health. Now, what does it have to do with your rate of return and your investments in your portfolio? Nothing. But I asked the question of the financial advisor one time, why is that important? Wouldn't it be important to know my health history and my family health history if you're investing my money? If I have I have a mother that's 90, had a birthday yesterday, turned 91. She's healthy and she's still going. Well, if that is a longevity sign, I'm going to live a long time. So if that's my money, you're going to live a long time. If I had a history of all the males dying after 65 from heart failure, then my investment model might be a little different. So I think it makes you understand your customer better. Then you can also lead into risk products by going, there's some things we need to talk about. What's your income plan? Of course, if people need life insurance, and there's guarantees in your income plan. I think you need disability income while you're working and annuities after you retire, because those are the income streams that you need to really focus on. So I'll stop there. And
Those are great questions, and I mean that entire uh, thought process took less than 4 minutes, and there's nobody out there that can't hang on to a conversation for 4 minutes and ask those questions and spark a conversation about income replacement in my mind. And the other thing is, I don't want to get too far away, but you mentioned something that's really key in terms of retention, because in my space, we're losing guaranteed income in the form of defined benefit plans left and right. I mean, every plan's flying off the shelf as fast as they can get rid of that expense. This is a low cost way of replacing and helping retention. And I think that's critical when you think about how are you advising business owners. What a great way to increase retention, because so many other benefits are becoming too costly or they're being lost. Talk a little bit about carrier selection. Why do we do business with the carriers that we do? And what are you looking for in terms of the carriers that you bring to the marketplace for Ash?
yeah, on the carrier front, actually what we do, we give them a scorecard. We work with all the major carriers, and we keep kind of track of who's the easiest to work with, the product. The product is key to it, but really, the product is part of the design. So we first find out what we're trying to solve the problem with, and then we go to the market and use the carriers, and they've gotten really, really good. They're improving their products, on a regular basis. So we're happy with that. And it kind of changes. Some carriers are more competitive than others from a product standpoint. But really what we do to make it easy for the advisor is, if it's underwriting, if it's a health situation, some carriers are more competitive with certain health conditions. Two, based on the design, we put it together. We actually put it in a format where we give them a choice. Again, we work with a lot of financial planners when the DOL told them they had to give 3 recommendations. So we usually get 3 recommendations, put them in a summary on 1 page, so you don't have to thumb through 3, piles of illustrations. We put it in a summary page with definitions and costs, so the advisor can present it in the easy mode. Because remember, I mentioned illustrations don't sell insurance. And I think it's more important the talk you had before you put out the piece of paper, and then you basically to show them you've done your due diligence. We've shopped the market. Here's the one that's best for you. But I think the real challenge for us is getting people to do it on a regular basis. I encourage advisors at every annual review, because they usually do annual review of the investments, is to ask about the income. Because you can, plan for the annuity when they retire, or if they need to protect their working income now, they can do it. So that's kind of our approach on that.
Yeah. Good friend of mine always says that talent gets you noticed, but consistency gets you paid. And so having that regular interval conversation and putting that into your presentation and putting that into your review, absolutely got to happen. And I would make an argument that if you're not doing that from a risk-based standpoint, you may not be meeting your fiduciary obligation, because you talked about the 3 things that are the 3 different things that people have to look at from a fiduciary standpoint. The other thing is you brought up a good point. The Conley case, it's a huge buy-sell industry, and I've sat through several continuing education presentations around the Conley. It's all been around the life insurance and the valuation of the business, but so many times we fail to address the disability buyout, right? And I don't know if you've got a stat, but how many buy-sell agreements actually address disability versus the death or the sale? You have any idea of that?
Unfortunately, in the sample agreements that you'll get from attorneys, it covers, like, the verbiage is there and they plug in a value, but they don't fund it. So more than 50% of the buy-sell life insurance programs we audit, there's verbiage for disability, but it's not funded.
Yeah.
So, and the reason is, people are busy. That's why, we kind of package things and people, we don't really cross-sell anymore, we cross-educate because it makes common sense for a business owner. They need a buy-sell agreement. You and I are partners. We need it. Quick, they get a prototype. And I've been trained better to talk about life insurance. I put the life insurance in first, and then we forget the disability, or we think it's harder to underwrite. Do it all at the same time. I think what we're going to find a lot of opportunities in the buy-sell arena as people review their plans because we're out talking about it. I posted on social media, when you review your buy-sell, make sure you look at the DI part of it. Yeah. And then go into all the other business products. Key person, and then the guarantee issue on the key execs. I think you need to get to, I think there's a lot of business opportunity in the small business, under 100 lives.
Yeah. Now, simplified underwriting issues is a great way to get to the business owner, right? Small business, we all have it. Like you said, so many 33 million businesses out there. There's a ton of opportunity. You've already talked a little bit about this, but if you were a financial advisor today, what 3 things would you be doing in your practice?
Well, we talked about already. I'd be all over the small business owner market. Mm-hmm. I call it 100 lives, and here's why. One, there's just a lot of them. There's 33.3 million. I think why that's important is it's just a sheer number, and they make decisions quickly. Now think about the average small business owner. They're looking for advice, but they trust you. They need it. And if you can put together a package, I talk to business owners all the time, and we talk about disability. But you know what other topic comes up? 401k, life insurance, and long-term care. So those are the 4 big things I think all business owners are faced with. Is my 401k enough for me to put money away for myself and my key employees? It's usually not. And there's a gap. And I would talk about the gap coverage, not just DI, across the board. There's a 401k gap. There's group life insurance gap. It's usually 1 or 2 times salary, not enough. There's a group long-term disability gap. It's 60% taxable usually, and sometimes doesn't cover bonus. And they don't even know it. So for the working people, it's usually a shock like, well, I only have 60%, and that's taxable. So I'm really having 42%. And then you ask, can your key people live on 42% of their income for a long period of time? You can't. And then the next shoe to drop is, have you thought about your health care after retirement? Medicare supplement and long-term care. And you know where I'm going with this. We're one of the very few DIBGAs that can do that across all products. And we can do that short-term disability, long-term disability, and the supplement and the excess plans from Lloyd's of London. So I kind of lay that all out, and we have a very good graph that shows that. But I go ask the business owner what your priorities are. Because we go in thinking what the priorities are. They can tell us. From an underwriting standpoint, selfishly, I tell them to do the DI first, and here's why. We can do guarantee issue DI and life insurance and a business owner with a group LTD and STD done, issued in less than 2 weeks. It's done. Long-term care takes a little bit longer, but they're thinking about it. And I think that wave is coming. What employers going to do for their elderly employees that might need long-term care or after they retire? And then the third one is the 401k, which I think is a big need in the marketplace for deferred comp. But those plans take longer to put and install. So I encourage advisors to do the easy one first, DI, no underwriting, census enrollment. We issue in a week or 2, you get paid, the employer has a good experience. Then you go to, here's some other things. And I will say this, I think income protection is the foundation. Now, if I died, there would be consequences, but some people we have some life insurance, maybe not enough. But if my income stopped, everything stops. Your mortgage then get paid, I'm sure if you didn't pay your cell phone for a couple months, they turn this thing off. Mm-hmm. And your electricity and your heating bill and everything else. So I think priority-wise, and it's not because I'm in this disability market, is income protection is absolutely critical. It's a cornerstone of financial planning.
Yeah.
And I would be a specialist in business supplement programs, and I would partner with other specialists. I partner with a investment person. I partner with an attorney. I partner with a tax person, and small business market. And I would leverage the carrier and Ash's expertise. I'm personally not real great at taking applications. I would leverage other people that are better at that. I don't want to case manage cases. I don't want, because I'd have to hire a whole bunch of staff. So I would partner with the carriers and people like Ash who would give me the best back room that I could do without having a bunch of staff, because I don't want to manage people. I just want to write business, help people, and not a lot of service work. And there's very little service work in DI.
Yeah.
No, almost none.
We can be on your staff without being on your payroll.
And that is exactly it. It is not a secret. I have a son in this business, and I encourage him to write as much protection products as he can and do it with someone so he can focus on assets under management.
Yeah.
And I view this as his partner. And I think, I don't know what it's worth, but as we write business and he builds a book of business, he can either hire staff people to do what we do, or he could rent us.
Yeah. Still got to have the conversation though, for sure.
Yeah, that's key, Mike. I believe it's really easy. And there are objections to it, but those can be all overcame. And I tell advisors, try to sell a product, try to sell the concept of income protection without using an illustration. Then come back and use the illustration to validate what you talked about and secure because the biggest thing is going to be the cost. You know where they're going.
Yeah.
It is not the definitions, it is not the underwriting. They want to know, and then you must recommend this.
Mm-hmm.
I firmly believe I do this. I make recommendations when I talk to people. I don't sell. I give you all the information. Here's the 3 or 4 carriers we looked at. Here's a design. Is this fit? Then I would recommend you go with this. And they will do it. I mean, if you're handling all my investments, which, all my money, income protection seems like a really small part of that as far as trusting you.
Right. Yeah. And like you said, so many people focus in on the retirement, but they got to make sure that they get there for retirement. So I just want to wrap up here, and I want to emphasize to all of our audience that I don't know how many times Brian has said easy, efficient. Those are the things that you need to be looking for when you're choosing your BGA, about how do you do business, how efficient in the back office and the scale that we have at Ash Brokerage with our DI LTC that he handles as well. If you haven't seen the video that I did with an interview with Brian Langdon that was released in the middle of March, I encourage you to do it. Just an unbelievable expert for our national spokesman for LTC. Those are all under the umbrella of what Brian does for us here at Ash Brokerage. So Brian, thank you very much for your time, spending time with us, and look forward to seeing you out on the road sometime.
Thank you. Have a great day.
Don't forget to contact us at 1-800-589-3000 or reach out through our website at www.ashbrokerage.com in order to learn more about Brian's team with disability income protection and long-term care. Look forward to seeing you at the next McGee Speaks podcast. Have a terrific day.